thank you for joining us today for our webinar focusing on ESG, specifically in the Central and Eastern European region. So, environmental, social and governance, or ESG, has certainly taken over as a theme in the last, couple of years, and Central and Eastern European nations are no exception. So we are seeing more and more firms making their ESG information available publicly, with reporting in Eastern Europe reaching par with Western European peers, for a while now already. And this in turn enables investment firms to search for the best way to integrate ESG factors into their investment decision-making process, and also provide more products which has an ESG slant to their clients. So today, we will further discuss the availability of ESG data in Central and Eastern Europe and the importance of ESG data standardization. We will also have a closer look at the role regulation plays in raising the importance of ESG for investment managers, such as the EU taxonomy regulation, which recently entered into force. And it is not only companies who now need to show an ESG score, but also investment funds. So earlier this month, Refinitiv debuted their fund ESG scores to facilitate industry transition to sustainable investing. And we will be hearing more from our speakers on ESG ratings of funds as well. I would like to introduce and welcome our panelists to today's session. So joining us, we have Sándor Viszkeleti, who is the CEO and chairman of the board at Amundi Asset Management in Hungary. We have Katalin Zaim, who is currently an associate professor and former United Nations Development Programme Sustainability Manager for Turkey. And we are also joined by Robert Wojnik, who is the vice president of the board at NNIP in Poland. And finally, we have Dr. Barnabas Aks, who is the Regional Performance Director for EMEA at Refinitiv. So we're going to start off with a brief introduction from each panelist, and then move on to a group discussion on some of the points highlighted already, and we will round off with some questions from the audience. So please, as Elena said, post your questions and let us know if you would like to direct your questions to a specific member of the panel. But before we start with the agenda, we have two polling questions which we would like you to answer, so that the panelists can get a better sense of, who's making up today's audience. So if you, let me just quickly go there. So if you look at your screen now, you should see a poll question, which is, what type of company do you work for? Asset manager, asset owner, or a hedge fund on the buy side, a government organization, an NGO, a stockbroker on the sell side, a corporate, or other. So those are your options, and I'll give a couple of seconds just for everyone to answer that. You can literally just click on the choice on the screen and submit your answer. Okay, I think we've given enough time. I'm going to move to the results. Right, okay, so most of the audience are from asset managers or an asset owner or a hedge fund. We also have some people from stockbroking organizations. We have some corporates, and then a large part is also from other organizations. So it doesn't seem as if we've got anyone from government organization or NGOs on the line today. Right, I'm going to move to the next poll question. It's a quick, easy one. So basically, just quickly, do you currently use or integrate or consider ESG as part of your workflow? Simple yes or no, and I'll give a couple of seconds again to answer that. Okay, good. Let's go to the results. Wonderful. Most people saying yes, 85%, and about 15% saying no, and hopefully looking to integrate into future. Okay, perfect. Thank you so much. So with that, I think we are going to kick off with our discussion. So I think I would like to broadly start off by speaking about ESG data in Central and Eastern Europe in general. And Shandor, I'm gonna pose the first question to you. So, what are your observations when it comes to ESG data for the CEE region, specifically with regards to coverage and data quality, and then also, what can you share with us about Amundi's internal practices when it comes to the utilization of ESG data internally?
Thank you very much. As a head of Amundi, we have a group policy to show our ESG expertise and also ESG experience also in the local market. The company decided that very soon that we will integrate all our mutual funds and all our investment strategies into ESG platforms. And also the Amundi have got currently reached several stages that we have got already have got an exclusion policy, all of our funds, which has got the worst companies we exclude our investment strategies. We call it G ratings, but it's very similar to other rates. And already we have got 320 billion euro assets in responsible investments. And our ambitions that we would like to integrate all of our active funds in ESG rating by the end of 2021, including the local funds in the region. And by that time, all of the actively managed funds promise that the ESG rating of the funds will be better than its benchmark ratings. Currently, to do that, because as we mentioned already, that there are no common practice for collecting ESG data, or there is no common taxonomy that how we can measure ESG ratings in the market. The company decided to set up an own research team who are doing internal ESG ratings for the corporates or the targets. We already cover more than 8,000 companies with that team, collecting data from the companies, from data providers, and also buying research about ratings. But our analyst team generate an in-house rating for the company. And it's also very important in our policy that we are participating in the general meetings of the corporates or meetings with the directors of the corporates or companies, and introducing the ESG concept. And when we have got a voting right on a general meeting, we implement our voting policy, the ESG goals and ratings. So it's very, very important. And I'm not only responsible for Amundi in Hungary, but I am the head of the local fund management association. And we also started to introduce ESG rating for the local funds, maybe in talk about later on. Just one thing is that the local or the CE corporates has slightly behind than the big companies in the market, but because of more and more demand for ESG investments on the market, and we have got lots of inflow into that segments, I think the CE companies also should start to think about that, how they can get better ESG ratings and implement ESG or sustainable policies into their activities. We also have them to reach that target.
Thanks very much, Shandor. I'm afraid I've also jumped the gun a little bit by starting off with the questions and not giving you an opportunity to introduce yourself. So, which you've incorporated now. I don't know if there's anything you'd like to add from an introduction perspective.
Well, I think it was fine. Just if I get 1 minute to complete the story of the corporate experience in the Hungarian market. that
Sure, go ahead.
when I visited a board of directors of one of the public company, they were not so satisfied with the ratings that we can provide about their ESG ratings, and they were surprised about their negative behind the average ratings, and they realized that how important. So they invited me for a board meeting and asked me to explain that how an Amundi-like company is looking for the ESG ratings, which and how they can improve their overall numbers. And they realized that they need to do something on that field. I think it will happen in the next future with all the large CE companies.
Great, thanks very much, Sandor. Right, then I'm going to hand over to Robert. Robert, please, if you'd like to go ahead and introduce yourself and also just state any points you'd like to make to the audience.
Very good afternoon to everybody. My name is Robert Bohyník, and I'm head of investments in NN Investment Partners for Central and Eastern Europe. NN Investment Partners is an international asset manager managing roughly 280 billion euros. We in Central and Eastern Europe are looking after, give or take, 10 billion euros of assets for our institutional as well as retail clients, be that insurance companies, pension funds, or clients of the mutual funds. Before we go to the questions, I would like to make actually 3 points that perhaps would be valuable for the audience to kind of understand where we are coming from. So that you understand, let's say, what our beliefs are, because we are in an environment where what we are discussing is not written in the stone, and things are moving and developing fast, be that on corporate, regulatory, or investment management side. First of all, we believe that responsible investing matters, and we within NNIP believe that it works. That's a belief. There is more and more evidence about it, but I understand that people can have various opinions on this statement. We as active investment manager, with our decisions, are having an impact, and we understand it that we can influence the society, nudging the companies we invest into or not invest into or engage with towards the desirable direction, not only to deliver a short-term financial performance, but also a broader set of results for a broader set of universe, if you will, for stakeholders. And the third point that I would like to make is that what we are going to discuss, what I'm going to discuss with all of you today, it's also about the journey. It's not about that we reach the whatever end of the road and we would now describe how things stand. What I'm going to discuss with you today is the journey and the way we within NN Investment Partners are participating in. So that would be it from my end as for the introduction. Thank you.
Thanks very much, Robert. And Katalin, I'd like to move on to you now for a brief introduction, please.
Yes, okay. So I will have the introduction plus some points related to the first question. Am I right?
You can just do the introduction. We'll get to the first question again.
Okay, great. Just very briefly, my background, I have 4 types of background actually to better understand the situation: geology, environmental technology, business management, and environmental economics. I am an academician. I was an academician teaching environmental economics and sustainable responsible investing. Then I had a long time assignment with the United Nations Development Program, and I was managing the sustainability program, which covers energy, chemicals, climate change, biodiversity, land management, name it, whatever you can imagine under sustainable development. But I was also part of the team who developed the 17 Sustainable Development Goals, served in different countries, and I also initiated the Sustainable Committee in the Istanbul Stock Exchange. which is functioning and it has its own system. My latest assignment was with Şişecam. Şişecam is Europe. It has 50 factories in 13 countries, is the second largest glass producer in Europe and again second in globally. Chemical production is the first globally. Chrome production, it has mining activities. And I was responsible to develop the company, the corporate sustainable strategy and coordinate all the factories and all the corporate functions from the sustainability perspective. And ESG scoring, reporting, and so on so forth was one of the main tasks. So I will want to share with you my experiences, and I believe it will be very useful for the participants. Thank you very much.
Thank you, Katalin. We're looking forward to hearing that. Barnabas, last one, over to you for your introduction, please.
Hello, pleased to be here. My name is Barnabas Aks, and as said earlier, I run the ESG strategy for sustainable finance in EMEA. And of course, on a personal side, I'm also very committed to ESG, or have been in the early stages of my career and the beginning of my PhD studies, and of course now. And I'm actually quite fascinated about the pace that ESG is getting into the forefront of attention. Us at Refinitiv, we are a ESG Generation 3 data provider, where ESG Generation 3 means that the ESG integration is happening at the very beginning of the portfolio selection process, not as an overlay. We cover about 80% of the global market cap, have 450 metrics, collected about a company, about 9 companies and 18 years of history. And we are also, what we are best known for maybe is our transparent and objective best-in-class methodology that enables 2 things. First of all, getting a off-the-shelf holistic overview and about the company's performance, and of course enables the actions that Chandra was describing and Robert was also alluding to make sure that any kind of company personal views, tailor-made opportunities are grabbed and exploited. The third point I might raise is that, we are providing solutions to the challenges of the regulation for corporates and of course wealth managers with the SFDR related questions through our digital capabilities, and hopefully providing scale. And don't want to repeat you, but we have recently jumped asset class as well, offering ESG scores for funds, covering about 20 trillion net asset value. So that's it for me for the moment. Of course, happy to be here and answer any questions you may have, frankly.
Okay, thanks very much, Barnabas. Right, so heading back to our first question, and we were speaking about ESG data in general in Central and Eastern Europe. So we've already given Chandra an opportunity. Robert, I'd like to move on to you now, and could you also perhaps tell us about more about how NNIP actually uses ESG data internally, and how you deal with the question of materiality?
Mm-hmm. Thank you for the question. Again, this is a very specific question. Allow me to say a couple of sentences on the framework so that the wider audience understands where the ESG data, the materiality that you are asking about, is coming into force. The slide that I hope is visible to you is actually in the blue circle, providing you with the framework in which within NN Investment Partners we are thinking about ESG as it is being integrated into our strategy. So Chandra was referring to restriction criteria, restrictions list, and so on and so forth. That's obviously very important. Another part of it is really being active manager when it comes to actively participating and voting on shareholders meetings and engagement with the respective companies. Why? Because it's rather simple and it's good first step to say, okay, there are certain company sectors where we do not want our clients to be involved. However, we believe that as a long-term active investor, we have also duty to be engaged with the companies we are investing with or we consider investing with when it comes to a wide range of topics, corporate social responsibility including. Then it is obviously about transparent reporting, and we would touch that one later on, I believe. And then it is the whole integration into the proposition that we are proposing to the client. Now, specifically to your question, Franita, there are obviously sources like Refinitiv that we are using as a source of information about when we are making up our minds on the quality of the company beyond its financials. However, especially in Central and Eastern Europe up until now, it's good old fundamental work of our buy-side analysts, also within my team, where we are actually looking after searching data and are engaging with the companies and having the conversations about the respective data points that we are just also taking. Because it's one thing to use external providers of data or even external providers of ratings. And we are partnering with companies like this. However, it's similarly to external credit, corporate credit or sovereign credit ratings assigned to issuers of corporate bonds by parties. And we love to do our homework ourselves. Now, coming to the second part, which is at least as important as the source or types of the data points that we are collecting for respective companies. The materiality we define for each sector or for each subsector in respective vector, be that environmental, social, or governance. Now, what I can say in general, the most important vector predominantly in emerging markets and Central and Eastern Europe is, let's say, part of emerging markets, regardless of how we look at things from all types of classification. The governance vector is by far the most important one, and it is a very important one, regardless of the type of the company we invest into. Now, the answer to the obvious question, why, Robert, you think it is like that, is that if you do not have the robust governance structure within the company that you consider as an investment, then whatever you would hear about environmental and social vectors within that company has a little bit less value. And then actually that's where either our external partners and or our analysts are being put in place. And this is how we are going about the question of materiality. To put it very simply, and this is like super simplification, when you have a model like we have our own internal models that would assign ESG score or ESG rating to respective company, it is the decision of our analysts who are saying which criteria is more or less appropriate for this or that type of the sector. So that's the way how we are approaching it.
Franita, can I jump in? I have a slide which can... Yeah.
Yes, please go ahead, Chando.
Can you see my slide? This is that I wanted to share with you that we have got a research for the recent years, the detailed research that how the best and the worst ESG-related companies performed compared to each other. This is the added value or the excess return that the best 20% ESG-rated company reached compared to the worst 20% ESG-rated companies. And you can see in the North America and the Eurozone that all the first bar is showing the total ESG ratings, and the other three is showing each segments like environmental, social, and governance, how they performed. And And it seems to be that in the different regions, the different classification has got a different added value for the ESG ratings. And the last chart showing in the emerging markets, we haven't got that detailed analysis for the emerging markets, just an overall. But I agree with Robert that the corporate governance question is the most important in the region, because always the emerging market is traded by a huge discount on the valuation because of the lack of clear legislation, the not so well-developed market environment. And in a company started to prepare ESG reporting means that they have got much more information about their activity. They open the box for the investors. They provide more and more corporate governance information to the investors, so they can reduce that gap compared to the developed peers. So that's why even the emerging markets that ESG ratings and reportings have a very good added value for the emerging market corporates, even in the region. This is the slide that I am showing to the local boards, that how that ESG reporting can help them to improve the share prices.
Thank you. Thanks for that addition, Shandor. Barnabas, I want to move on to you now, and can you maybe give us a little bit more of a general idea of what global or regional trends Refinitiv is currently seeing when it comes to the availability and the use of ESG data?
Yeah, thank you for the question. When you talk about coverage or data availability, I think there are two angles that you have to take into consideration. One is actually the data available? Bear in mind, so is the data reported by the companies in the given region, or yes or no? And if yes, is that onboarded into financial platforms or not? The two are two different questions, but have an effect on the sort of the coverage. I would believe that in developed financial markets, the existence of data is a little bit more than can be onboarded, whereas in the CE region, the data availability might not be that abundant. You also have to take into consideration that there are some limits in scale in how you onboard data, because the data, which is the main source of these data sets, are available in financial statement appendices, CSR reports, so heavily textual documents. So even though we have a lot of machine learning, AI technology that is available to us to onboard data sets, it still involves quite an amount of expert data analyst work to really qualify the data sets. So this is the outset. These are the challenges. Of course, on the existence of data, I believe that the European set of regulations are going to influence quite heavily how many companies do report and what they will report, just to call the non-financial reporting and directive into the forefront. And that alone, that regulation would affect about 2,000 companies in Europe if it stayed at the 500 employee level. But of course, there are talks about lowering that to 250, so that could even more improve the data availability. And of course, the other challenge is how do you onboard that? How do you help companies in standardizing their reporting, and how do you sort of cut the textual documents sort of out of the system that onboarding becomes a little bit less cumbersome? Of course, there are solutions to that. Obviously, we are most proud of ours, which is the digital onboarding tool, the contribution tool, which is uniting a sort of a kind of a soft advisory on what to report on and providing a platform to access to financial markets. As to the numbers, we have currently around 200 companies in our database that are coming from CE. This is also including Russia and Turkey, knowing that there are actually quite, this is basically the set of blue chips that are out there in those markets. So if we want to, we have quite a lot of, field to take on board more companies from the middle range, so to say. So currently, I would say we already have something to start the journey and to onboard onto the journey, as Robert said. But there is a lot to cover still.
Great. Thanks very much, Barnabas. And lastly, Katalin, I want to get to you and just ask for your quick observations, that you would maybe like to share in this regard. And then also maybe if you could touch on any points you want to make around ESG data standardization.
Well, my answers are obviously from the other side of the game, like the private sector perspective, that we as the company, a global company, obviously we were very much engaged in trying to bring different type of investment opportunities, and ESG score was very important. But what I wanted to share with the participants that when you are in such a large company and the challenge that we are facing, and these are daily challenges, that there are different type of ESG scoring companies, as you all know, and obviously that the board or which one to be present or be invited and be actively present. But then the translation of those requirements into the daily practice is very challenging, because obviously higher the score is easier to be able to mobilize resources. And the major problem is really the data, as colleagues also planning. Then data management, it is automated and pulled through the several infrastructure of the company is extremely challenging. I'm telling you that we were dealing like about 3,000 questions and we were continuously reporting on different grounds. So these ESG reporting or indexes are actually pulling data from whatever the companies are sharing transparently, like the web page or the report, if they prepare or not. As Shishajan, we obviously made a major improvement on our web page, and as Robert was telling, governance is extremely important. You have to put out your policies very clearly and transparently, because that's where they are pulling the data very fast. So the web page design should be such that whoever is trying to evaluate a company from ESG perspective can reach the data very easily. So it should be simple and transparent. But in the same time, the reports are also very critical. And what I saw since as an academician searching for other companies are low score companies, reporting qualities are extremely poor. They do not have very clear target setting, and they just don't use the concept of baseline and target and follow up. So by doing so, obviously for companies like Barnabas and the other colleagues or Refinitiv, understanding a company is extremely difficult. So transparent data, and if possible, the report should be time-based. That is, you can compare the values, improvements, and if possible, an impact assessment in the reports is very important. There is a new trend, I'm sure you all know about it, what we call the integrated reporting, which is rather challenging, and not too many companies knows how to do that one. So that will be the future, and that will be surely facilitating the ESG scoring companies. So this is just a very starting point of our discussions. So as you know, the indexes has so different questions, and aligning or to be able to answer to all those questions in the same quality manner is very, very challenging. So if companies want to take it very seriously, they have to have a very strong team behind, or an automated platform, which actually are designed for Shishijam, and we just pull the data from different platforms. So this is what I wanted to add. But what Robert is doing is extremely important, and that's what I faced, that unfortunately our scores were not as high as I wished, but Robert, the company that Robert is managing, is important to improve the ESG scores by having one-to-one discussions. Thank you.
Great. Thank you very much, Katalin. I actually want to stay with you and just move on to our second topic, and something that was mentioned, by the panelists previously is the regulatory frameworks and the effects that the regulatory frameworks are having on asset and fund managers and the rest of the industry. So, how much is the European framework in line with the UN Sustainable Development Goals, and will it also have an impact on corporates, do you think?
Well, actually, that's a very, very important question, and what the colleagues should remember that the EU framework came way after the SDGs, and what I want to also remind the colleagues that all this sustainable development goes back to 2000. So unfortunately, the SDGs, the 17 goals, is a very complex system. But when you look at it, it is really at the governmental level. So when you want to translate that one at the level, that's very difficult in Dutch. And there are 17, and not every company has the. A company doesn't have to fulfill all the goals. Whatever is relevant, then they have to choose and translate that indicators to their own activities or business activities. Now, when the EU came up with the framework, that is based the decision on the SDGs by force. But when you look at the content, obviously they try to focus on the key global agenda, like, for example, climate change or water resources or energy and so on and so forth. So actually they are feeding into each other. But the EU framework, when you look at it, is they are also trying to come up with practical selection of interventions which is sustainable, like as Shandor was also telling, taxonomy assessments. Now, when you look at the system and you try to kind of match yourself with that system, will not be easy, as it's not easy to match your company profile with the SDGs. So it boils down to the point of having two choices for the company. One, aligning its activities and improving its activity according to the ESG scores or the EU regulations, which is one, of course, is then a reactive type of action, or the other way around, being a proactive company and taking and deciding that I am going to do a difference on sustainability. So we will, in the upcoming questions, I will be sharing more information on that one. So matching is, of course, there is a certain level of matching on the global scale, global issues. But when you drill it down to a more micro scale, it is extremely difficult.
Great. Thank you very much, Katalin. Barnabas, I'm going to move back to you and just to get a sense of how prepared and ready do you actually think the market is for the new regulatory frameworks coming into effect?
Not too. So not too prepared. I mean, of course, this is the catch-22. There are different regulations that are aiming at different market participants. So NFRD aims at the reporting corporates, whereas the SFDR and the taxonomy, more or less, the SFDR is aiming at the financial institutions, and the EU taxonomy is trying to sort of combine the two attentions. I mean, NFRD just entered into force this year Europe-wide, and there was a survey And it really showed that this is more or less a box-ticking exercise at this stage. Mainly because of the depth of answers provided. So, for example, in the case of human rights policy, 80% of the companies said that out of the 1,000 surveyed companies, they said that they do have a human rights policy. But only 20% reported on the actual process, how they monitor that and that human rights policy, what they have. And a similar situation is true, for climate-related risk. 53% of the companies said that, yeah, they have that risk, but only 23% actually talked about the whole process and how they do that and whether they do anything about it. So you can see that the regulation didn't really serve as well as it should have. Of course, the guiding principle was to give enough laissez-faire for companies to report on material stuff that's important for them. So there wasn't any clear descriptive measures on what to report on. There were a couple of guidelines, and the companies were left with their own decision what to report on, and this resulted in this kind of survey results. So there is more to expect in this space to be a little bit more descriptive for companies to know actually what is important, either from financial materiality perspective and from a sort of impact materiality perspective. What is important, what they have to do as such. And of course, it also has an audit requirement coming with it. So once this is taken a little bit more seriously, then of course the consultancy companies or the audit companies who also do provide consultancy on this area are going to dive into the space more deeply than we would see, hopefully, better data quality reported by the companies. And just on the fact of SDGs, totally agreed with Katalin. And the only thing I would add is the big discrepancy with the SDGs is that, the main impactors or who can really make an impact are the corporates. But the SDGs were actually planned and aligned to country level indicators. So it's actually a challenge, and work is being carried out to match those SDGs to some kind of corporate indicators. Once we have more standardized views there, then I would see that would also improve in the space. But we started.
Thanks, Barnabas. So SDGs being mentioned a lot, and Robert, we had an interesting discussion, on how NNIP is actually practically implementing SDGs. I think that's always the struggle, right? How to practically then apply some of these regulatory frameworks. So can you maybe just share what you can from an NNIP perspective on how you are implementing the SDGs?
Okay. Again, allow me to share with you a slide to give you a little bit of perspective. Basically, when we were thinking about how we can incorporate the most important initiatives in the area that is covering factors beyond the obvious or usual or traditional financial metrics, the lenses that we used for decades when looking at investments, we were also very actively going through the UN work because this is one of the groundworks that has been done as mentioned before. And basically what we've done, we looked at our most strict ESG integrated strategies, which in our world we call impact strategies. It's the right-hand side. And then we said, okay, what we are saying as a proposition towards our clients is that not only we are looking at the companies that are sustainable in the sense they are doing their business, but also via doing their activities, we believe as investors that they are positively contributing to one or two or several key areas, and we identified 6. It's in 3 buckets, if you will. It's about the governance, it's about the climate and natural resources, and it's about decent work, where we believe that companies that we identified as sustainable with the very high standards we can kind of measure contribution towards fulfillment of this. Because what we believe also is that transparent reporting on what we are claiming is part of what we are doing within the responsible investing framework. So basically, this is how we use the UN framework, and we just borrowed it, if you will. We adapted it, and it allows us to look at the companies and identify those companies that are positively contributing to 1 or 2 or several SDGs. And this is just an example of how we are also, to the extent possible, we are measuring and also reporting on respective strategies, what we have in mind when we say that we are running an impact strategy which is supposed to have positive contribution to the fulfillment of 1 or several SDG goals. So that's Franita, how we go about it.
Thank you. Thanks very much, Robert. And Shandor, just to give you an opportunity to maybe give us a little bit more information as to Amundi's approach to regulatory frameworks, and especially when it comes to funds. I know that we've spoken about, some of the targets that you've set yourself internally for next year, and I was wondering what you could share with the audience on that. Shandor, we can't hear you. I don't know if you're perhaps on mute. Okay, I think, Shandor, I think you might... Okay, I think Shandor might have some technical difficulties, so we're just going to move on to the following topic until we get him back. So that brings us into sustainability rating of funds. And Robert, I want to start off with you again on this regard. So is sustainability rating of funds, an important topic in the region in Central and Eastern Europe? And what challenges and breakthroughs are you seeing in this regard at the moment?
Mm-hmm. Actually, where we are now, the fact is that if the fund does have or doesn't have a sustainability rating, is for the moment a nice to have factor at the best, I would say. The concept is still new. That's our guess. Why is it so? And the criteria are not universally defined. We believe that the time would come, the dust needs to settle. The regulation that we are going to face would certainly create a level playing field so that people would understand what it actually means if we say that you get a sustainability rating of X from the provider Y. Now, what are the biggest challenges? I would say I would just pick up 2 vectors along which I would answer that question. First of all, we come across the fact that the companies still need to learn to be open-minded about their investors, their shareholders, asking them questions that go beyond traditional short-term, mid-term, long-term financial / commercial / business performance. So that would be perhaps one thing. And then there are groups of investors that are still skeptical about whether with going towards ESG integrated strategies, you are not going to give up on part of the investment performance. Because many times, even sophisticated investors have fair questions about, okay, what is the price I'm gonna pay for it? So that's these are the two most important vectors. What I have to say, however, which is very encouraging, is that actually at the moment, predominantly with institutional clients, but it is very quickly coming towards a wider investors base, even on the retail level, is that people want to understand, what do you mean when you are saying that you are integrating ESG framework into your investment process? What does it mean when you have ESG sustainable strategy or even an impact strategy? And when they have the possibility to have the conversation with us, when they understand the framework, when we are able to show them in real numbers, like I showed beforehand, example of how we are approaching it, and when we show that actually you are not paying up the price in terms of extra performance, that it actually helps, then you start to have very interesting conversations. And with the most sophisticated investors, it's slowly becoming a competitive advantage. And I understand that rather sooner than later, and I'm talking a year or two, it would be absolutely crucial to have that framework implemented and in place and up and running, because now it is, let's say, competitive advantage, if you will, because in Western Europe, be that on the Dutch market, where the roots of our companies are, it's a necessary requirement in order to even start a conversation about investor giving you to look after his or her money. So that's how we look at things. And let's not be too harsh on ourselves. We have a tendency to be a little bit impatient. On the chart that I'm presenting at the moment, I would like to show that actually within NN Investment Partners, we started 20 years ago. So let's not be like too harsh on ourselves, too harsh on our business partners, too harsh on our corporate business partners, companies we invest with, because we have to learn it much faster than certain peers in more developed markets. So that's how we see that from.
Thanks, Robert. In the interest of time, I know we've got about 5 minutes left. I quickly want to go on to Barnabas. And Barney, can you maybe just tell us a little bit more about Refinitiv's approach to ESG fund ratings? And can you tell us more about the recently launched Refinitiv ESG fund ratings, please?
Yes, happy to. So just two things to highlight. I think why fund, and I completely agreed with Robert, and I think why fund rating is very important, because it sort of powers and empowers the wealth management industry. I mean, let's face it, the general public is more investing into funds than it does in companies, and they have less of information about the ESG, which on its own, it's quite a, how would you say, too broad concept. I don't want to introduce the greenwashing concept now because we don't have time, but basically what we have to do with fund ratings is be able to provide a generic number, and of course be able to provide some kind of underlying numbers so that the public can check it on a fund level, that everything is going all right according to their requirements, let's say on climate change, if they invest in a fund. So that's why I think it's important. And once it gets a little bit more, more into general mainstream capacity, then its importance is going to be hugely crucial. What we have done is nothing rocket science, because everything is going back to company reporting and company rating. So what we do on our fund rating concept is, of course, adding the world-class, brand and history about trustedness from Lipper, but basically using all underlying company ESG scoring and ESG-related data sets, and elevate it to a fund level based on holdings information. So that's what you see, hopefully, on the slide. And we also wanted to sort of combine a overall view, which is in the top section, and some detailed drill down view, which is also detailing categories on the fund level. As I said, nothing is rocket science as per methodology, so to say. However, collating all the information to be able to promptly do this is actually quite challenging. Holdings information, diversity concepts, fund of fund concepts, and of course coverage coverage thresholds for fund constituents are all a factor that you have to cleanse for and make sure that the data is right. I give the time back to others if they want to comment, so thank you.
Thanks, Barnabas. I think that Shandor wants to just wrap up what he was saying and also maybe comment as we lost him. So, Shandor, I'm gonna give the floor to you for about a minute, please.
Okay, can you hear me now? Can you hear me?
Yes.
Okay. Just one comment on the fund ratings, that in the Hungarian Association decided to introduce local funds ratings, ESG ratings. We are applying that into our operations. That we introduced 4 ratings. First is not ESG rated funds. The first one is that you have got an ESG reporting and you have got exclusion policy. The second ESG funds is that you have got ESG plus, where you have got a positive selection that you would like to get better ESG rating than your benchmark. And the last one is the impact funds, when you have got a sustainable target, not only you have got ESG rating. And we would like to introduce that measurement for the local funds this year, which allowed the local issuers, fund issuers, to provide ESG labels for their funds. I think this is a good start for that.
Thanks very much, Shandor. We've got 1 more minute left, so I'm going to go to one of the questions that we've received from the audience. They've asked, what do you think about the SDG Ambition Impact Initiative aiming to scale up business action at the national level? So it wasn't directed to any of our specific panelists. So is there anyone feeling comfortable in answering that question?
I can share with you our experience.
Please go ahead, Katalin.
Okay, so actually we have this investment ratio that we are managing, and I'm the advisory board of that one. And to be able to promote the idea and raise awareness between the companies, because that's I think just returning back for SDGs as well, is why SDGs are important, because it's a very important tool to raise them or create a vision in the companies where all this kind of gravitated into. And I'm sure you all work with private sector, and when you enter into the daily routine, you will see that the managers and the top level managers, they have very limited knowledge on sustainability, on vision of SDGs and how to integrate that one. So the way that we approach that one, and to promote and to also create a positive ESG funding as well, is we kind of approach the government and develop the guideline for that one. So we hope that a kind of a national guideline on what should be, which type of activities or which type of investment of companies, or what are the criteria that a government, at the government level, could be discussed for eventually to subsidize companies when they are engaging into sustainability solution. So if that is really accepted by as a policy, or exactly as an SDG policy or ESG policy, you would like to call it in one way or another, then of course that will allow all the companies to feel much more safe and secure of initiating or taking the risk of picking up certain activities, is very challenging because, especially in this pandemic era, lots of bankruptcy occurred. So there is always the question how to handle that one. So that might be the ESG funding and scoring will be, in my opinion, a very nice or a very important opening for new potentials, especially from the social perspective.
Great. Thank you. I think we need to wrap up. We are at the end of our time. There are a couple of other questions we didn't get to from the audience, but as Elena said at the start, we will get back to you on those. I also just quickly want to thank Anita Kovsko and also Anastasia Emelianova, which was key in setting up this webinar. Thank you again to all the panelists who participated and to everyone in the audience who joined us for our discussion this afternoon. We hope it was very value-add. It was certainly interesting to me. And have a good day, everyone else. Thank you very much.